My guest today is Aditya Das. Aditya is a colleague of mine here at Brave New Coin. He is a researcher. He is an analyst. He is a semi-regular guest here on the Crypto Conversation. Welcome back, Aditya. How are you doing?
Doing very well. Thank you for having me. This is always fun, and yeah, I'm glad I got the semi-regular status now.
Yes, indeed. So, what I want to do with you in today's show, Aditya, I haven't really done kind of like a market report in a little while, and now that we've we've been in this bear market for a little while. You wrote a piece for Brave New Coin, and I think one of our research clients a week or so ago, just kind of looking at some of the Bitcoin indicators that might start to suggest where we are in the cycle. So I thought that would be potentially quite useful for our listeners. So you and I will just run through some of those indicators today and see what they say. Before we do that, Aditya, I must ask, are you familiar with nootropics? Do you know what a nootropic is?
I am familiar with them. I have used some of them in the past with varying results. From what I understand, they're essentially things that optimize brain activity. So pills or powders and that sort of stuff, which has similar sort of effects to things like caffeine, some sort of, I guess, yeah, thing that gets your brain functioning more efficiently.
Yeah, I mean, well, hey, there you go. There's a very good summary, Aditya. You're exactly right. Of course, the reason I mention this is because the current crypto conversation sponsor is a Newtopia, as people will be aware from my slightly excited sounding host read at the beginning of the show there. But I think I mentioned a while ago, you may not have heard it, listeners, or you, Aditya, but I said that the nice people at Newtopia were sending me some samples so I could give some of their products a go, and if they did so, I'd report in here just every now and again to report back on my nootropic journey, I guess. So it's a roundabout way of saying the nice people at Newtopia, they sent me this giant big box of product, and really sexy packaging, really nicely presented, lots of information, and probably about almost 6 or 7 different products to try. So the ones that I've tried so far, Aditya, I've tried Nectar X,
Mhm.
Power Solution, and Upbeat. And so the idea is they give you some pretty good instructions. You know, sometimes they're powders you mix with water, or they're quite big caps that you have to swallow, but they're not too bad. It's easy enough to swallow, and the idea is over time, as you kind of, if you order one of these packs, you can stack them, right? So you stack the different products together to stack up the different
Mm.
mental and body effects that you're looking for. So I haven't started stacking them yet. I'm just trying all the individual ones, but you can feel them, work. They do give you a little bit of a lift. Some of them, they say, like Power Solution, which is, I had that this morning, Aditya, because I was going to be talking to you, so I knew I needed to be on my game. And it talks about Power Solution is a potent drink that's great for increased aggression and drive, great for all
Oh
day
wow.
energy. And it says, avoid other caffeine sources. So I still had my cup of coffee, but that's why I think I'm talking fast, Aditya. I've had some Power Solution today, listeners. So anyway, that is, I'll leave it there, but I just wanted to check in and say that, thank you to the team at Notopia for sending me some nootropics. And of course, you can find the link to find out more about those products in the show notes or the host read at the beginning. All right, should we get on with it, Aditya? What do you reckon?
Let's do it. Yeah, let's do it.
Where should we start? Should we start with, I don't know, any sort of general context on where you see the crypto markets at the moment?
Yeah, absolutely. Let's start there. And kind of what's been happening in the last week. Um, Part of the reason I, wrote that article, looking at 5 fundamental indicators, which may suggest that Bitcoin is oversold, is because we seem to have established this floor with the Bitcoin price around the 19,000, 20,000 US dollar price level. And what's been interesting in the last week is we had two pretty bearish news events, which was one, inflation in the States hitting 9.1%, a new 40-year record. And number two was Celsius, the major crypto lending firm, filing for bankruptcy. And while these were, negative kind of bearish stories, and perhaps, a couple of months ago, it would have led to a double-digit 24-hour price loss, markets actually kind of rose steadily. So what we perhaps are seeing is kind of the end of a really long negative bearish macro news cycle, and a lot of these kind of big picture events being priced in, and perhaps a bottoming out and a steady rise over the next few months, because a lot of the selling pressure has been exhausted.
Yeah, I think that's a very nice summary. So we'll have to see how this plays out. But that does make sense, because I think Aditya, June was on record, or is on record now, as the single worst performing month for Bitcoin, if not in all its history, since the very early days. And the reason for that, of course, is collapse of Three Arrows Capital and Celsius, and all those kind of leveraged positions being forced to unwind. But if that was a dark time in the markets, it would make sense that we would have at least some kind of local bottom after that, right?
Yeah, no, it's exactly true. It's kind of natural in mathematics and statistics to see sort of mean reversion effects, where you kind of return to the norm after like sort of a black swan, or sort of an external selling pressure or buying pressure event. Kind of markets normalize and start behaving the way they would under normal market conditions. And that's not to say like all of these sort of negative events or we're clear from a macro perspective, but yeah, there's just been so much selling pressure. And like you said, June was perhaps historically the worst month ever for Bitcoin, percentage loss wise. It's sort of to be expected that there'll be some normalization, and some investors who are like, okay, this might be the bottom. There might be a little bit of mean reversion, so let's re-enter.
All right. Well, before we re-enter, let's run through some of these indicators that you're talking about, Aditya. So, fundamental indicators that suggest Bitcoin is, or at least was, oversold. Where should we start?
Let's start with perhaps the most discussed and controversial indicator, stock to flow.
Okay. Yes.
So stock to flow is an indicator which assesses the intrinsic value of Bitcoin. So basically, if you take away all the speculation and market dynamics and the effects that social media discussions have, and focus on like what's really going on underneath the hood, stock to flow is a model that focuses on non-market effects, the intrinsic value. It is a measure of how much new supply of an asset is being created over time relative to its existing supply. So we have a certain amount of Bitcoin in total, and a certain amount of Bitcoin being produced each day or each minute. And it's how long it takes based on the current production rate to hit that total stock. The idea here is that the more difficult it is to produce a scarce asset relative to its total supply, to relative to how much there is in existence, the more valuable it becomes. Historically, it's been an indicator that's been used to assess the intrinsic value of hard assets. So things like gold and silver. And a few years ago, a pseudonymous analyst built this model that applied the same sort of logic to Bitcoin markets, and immediately it sort of became very popular and rang true for a lot of investors, because Bitcoin shares a lot of characteristics with assets like gold and hard assets at a fundamental level. So yeah, the logic is the more scarce Bitcoin becomes and the more difficult it sort of becomes to source and generate, the more valuable it becomes.
Yes, and well, okay. Before we talk about, so you're talking about Plan B, who's the pseudo anonymous trader behind stock to flow. I mean, stock to flow. Let's be honest. Widely discredited by a lot of people. Because where should the price of Bitcoin be now if it was still tracking stock to flow? It should be at 100K, right?
It should be, yeah. I think it's a little bit over 100K, about 126,000.
Yeah, or at least above an average of 100K, shall we say?
At least above an average of 100K. And yes, you're right. It has been maligned quite a bit because, I think the biggest criticism of it is that it doesn't really consider demand. It's purely focused on supply and kind of assumes demand in a way that's kind of based on, scarce assets are demanded because of their scarcity, because they're valuable, because they're rare. And Bitcoin's sort of utility has changed over many years and its demand has been dynamic. And unfortunately, stock to flow isn't a model that really captures that dynamic sort of changes in demand and the nature of the way Bitcoin is demanded. The reason I kind of wanted to bring it up is up until the most recent cycle, it has done a pretty good job of kind of sending signals of whether Bitcoin is under or oversold. So yeah, we've seen mean reversion patterns with stock to flow in the past where, it says that, hey, the intrinsic value suggests that Bitcoin is being valued too highly by the markets, so its price should drop. And historically, when the signal has been from the stock to flow has been that the price should drop, it does drop. And at times when it looks like it's oversold and the stock to flow model is suggesting that, hey, the market is undervaluing the assets, they're overselling, they're being a bit too emotional, it has kind of followed the pattern where it's returned back to where stock to flow says it should go.
Yeah, and to be fair to Plan B, at 100 trillion USD is his Twitter profile. So I'm just having a look at his Twitter, Aditya, and he posted a tweet 5 days ago. So he says, How is the stock to flow model doing? And he says, well, there's been a large deviation with the Bitcoin price. And he compares this to the same large deviations that occurred in 2013 and 2017. The difference being, of course, as you kind of said yourself, those deviations were to the upside, and we're now experiencing a similar price deviation, this time to the downside. I don't know if he's still holding on to it. You're right. Could come. No reason why the model could kind of come back into sync. But yeah, it just feels a bit weird putting too much, I guess, trust in the model, given that a lot of people had those hopes dashed last year when everyone was really certain that Bitcoin was programmed, it was going to 100K and beyond, and of course that was not the case.
Yeah, totally. If you look at the model, yeah, as Plan B points out himself, it's severely detached to the point where you almost can't draw a relationship between the price line and the stock to flow predictive line. But yeah, as Plan B himself also points out, is it's a forward-looking indicator, and it does sort of put a crystal ball into what might happen to the price in the future. And he's going to back his own theory and suggest, hey, it's going to realign. The future reflects the past. But yeah, it's anybody's guess whether it is going to realign. But yeah, at the minute, it's perhaps overvaluing the intrinsic side of Bitcoin a bit too much. So we just have to wait and see whether they do realign.
All right. Let's move on from stock to flow. What's your next indicator, Aditya?
The next indicator is a little bit more of a pragmatic one, and it's called MVRV, or market cap over realized cap. This the reason I call it more pragmatic is because it assumes that Bitcoin investors buy and sell the assets cyclically, um, which kind of I think will ring true again for a lot of Bitcoin observers, because Bitcoin is an asset which at times has a sort of a weak hands element to it, where there's a lot of sort of not who jump in opportunistically and leave opportunistically as well. So it sort of like breaks the market into the sort of cyclical investors that come in, at periods like 2017 and 2021, buy and then exit once the price of the asset is dropping.
And by the way, listeners, so we are recording this on Zoom, or we're recording Aditya's screen. So he's sharing his screen. So if you're just listening to this as an Apple or Spotify podcast, audio only, that is okay. We're going to explain all of these indicators to you. But if you do think that a visual chart would help, and let's be honest, I'm sure it will, then I'm going to publish this on the Brave New Coin YouTube channel as well. So Aditya has now got the MVRV chart on screen. All right, talk us through it, Aditya.
Yeah, so just to define the model quickly, market cap is probably a term most crypto-centric people are aware of. So in the context of the cryptocurrency space, market cap is the total number of coins that have been mined or released, and that is multiplied by the price of a single coin. So that's how much the market values an asset. Realized cap is a variation of market cap, and instead of multiplying every coin by the current market price, it instead multiplies each coin by the price it was last moved. And it works well with assets like Bitcoin, because they use a UTXO model, so you can see the price of coins when they moved. So essentially what realized cap is doing is it assesses when coins were purchased and when they were sold, so you know what sort of the demographic the investor is in. Is it an investor that bought when the price was $100 and then sold it at $25,000, or is it an investor who bought in at $21,000 and then sold when it was $17,000? So it kind of sort of breaks up the markets so that we can see sort of the investor behavior patterns. So yeah, historically, when you look at the MVRV ratio, at points in 2012, 2015, 2019, and 2020, you see that it signals kind of a market bottom when it drops below a certain point.
So when it drops below 1, isn't it?
When it drops below 1, that's sort of the rough signal of where we're entering into oversold zone.
And
in
where
some
are we?
cases, like
so where are? Sorry to interrupt. Where are we now? We're below 1 now, aren't we?
We're below 1. We're about 8.4. And yeah, sometimes it can be difficult to predict exactly when that bottom is hit, like in 2012, sorry. But generally, when you see it happening, you get this kind of pattern where, yeah, it sort of signals the bottom, and then the market price sort of either starts to stagnate or starts rising quite quickly. Yeah, in most cases, like in 2020 and in 2019, it's quite a clear or close to the bottom. Like, so for example, in 2019, it doesn't quite bottom out immediately after the MVRV reaches a bottom, but it sort of steadies out and then kind of a few months later starts to pick up in price. So yeah, what sort of that suggests, the bottom kind of occurs when, for that period, investors have sold out or, kind of crystallized losses or profits, and they're sort of, as the crystallization has clearly been determined, and most of the market has exited their positions, and what you have left after that exit is people who aren't willing to sell or aren't really willing to move their coins. So
Cool.
yeah, it feels like we're at a point where the MVRV has been dipping considerably, and is moving downward sharply, and yeah, has appeared to reach a point where a lot of those buyers in 2021 have seen the price drop and are now kind of like, okay, we've been have been exiting markets, and now it appears sort of to have sort of flatlined, and it isn't really dropping as much. So that would suggest that, yeah, sort of the market has been flushed out, and yeah, the selling pressure that may have been built up because of people who bought in near the top have now sold.
Got it. Okay. Let's move forward, Aditya. What is your next indicator?
So
And if you are watching this on listeners YouTube, if you're watching this on YouTube, listeners, perhaps we'll circle back at the end just to have a look at stock to flow, because I'm aware that we didn't show that on screen at the time. So apologies for that. We'll come back to that. But what have you got now, Aditya?
So the next thing we have is Nvt Signal. So this is a metric that's focused on the utility of Bitcoin. So Nvt Signal stands for network value to transactions. And this assesses the relationship between the market cap of Bitcoin or any other asset and the network transfer volume. So the number of transactions taking place on the network by volume. So again, like MVRV, we're comparing the market value of an asset with an indicator that looks at its intrinsic value. In this case, the metric that's looking at the intrinsic value is transaction volume. So how much is actually being transferred using the Bitcoin network on chain? So excluding exchanges, which may be capturing kind of speculative transactions or moving around the asset for speculative reasons, and focusing on Bitcoin as a settlement network. So Nvt Signal will capture things like Bitcoin being used in Africa or the Middle East as a way to protect your citizens from inflation, or is being used by Bitcoin consumers to buy things, and yeah, just actual utility of the network as a payment and settlement layer. And the reason it's become popular is, I think we're all kind of aware that Bitcoin is sometimes used as a speculative asset and as a store of value, but what it really kind of is sort of built to do is to settle transactions and be a payments layer and a settlement layer for either large transactions or everyday consumer transactions.
Yeah.
So yeah, sorry, Andy.
Yeah, and okay, got it. So, and just briefly, what is the Bitcoin MVTS showing us at the moment? What's it signaling?
So again, like the other indicators we looked at earlier, that it is oversold.
Yeah.
So yeah, we see it, well below 3 standard deviations from the mean,
Yeah.
using the adjusted NVTS, and using the regular NVTS. This is sort of a band where normally ranges between. We can see that it's dropped considerably below that level. So what that suggests is Bitcoin is still being used quite a lot as a transaction layer and a settlement layer. And that's not really being reflected by the price, which continues to trend downwards. what it suggests with the NVT signal being this low and this kind of, so far below the standard deviation is that the price drop is being more driven by external factors. So reasons outside of utility. So it kind of implies that the Bitcoin network, for people who use it regularly, they aren't really being affected by, the price drop. They're still using it for its everyday use cases. And yeah, what mean reversion theory suggests and what has happened historically in the past is if that, fundamental usage of the Bitcoin as a settlement layer is still occurring despite the price falling, then you should see a reversion effect and price returning to some alignment with utility and fundamental use case.
All right, very nicely said. Well, Aditya, the evidence is starting to show perhaps that Bitcoin has already reached or is near, if not a local bottom, maybe even a cycle bottom. Far too soon to say that, but indicators are starting to look that way. What have you got next?
The next one is quite an interesting one. And yeah, it's the thermocap multiple. So thermocap looks at how much is being paid for how much miners are being paid for their services to the network. So it looks at the price of Bitcoin in a given day divided by the historical block subsidy. And then, yeah, comparing that to the amount Bitcoin traders are being paid currently for their services by looking at block rewards and the transaction fee. So it compares how much miners have been paid historically using a historical block subsidy number and how much they're being paid currently, and kind of assesses whether miners are being paid fairly based on what they've been paid historically. And yeah, if we look at the multiple right now, we kind of see it sits at this number of about 50, which has in the past been sort of a number where the price has bottomed out historically, this range between sort of 30 and 50. And normally when the price gets that low, it starts to kind of pick up steadily. And yeah, so when you see the thermocap multiple, like we've seen with like a few other indicators, dropping more rapidly than the market price, then there is kind of a suggestion that the market is undervaluing how much miner services are and are sort of underpaying miners because kind of connected to the utility metric NVTS is that the Bitcoin as a transaction layer is still working to some extent as it normally would, and is sort of semi-detached to what's happening with the market price or the external price. And despite the external price dropping off quite considerably, miners are still doing their services and are perhaps being undervalued because there's all of this external non-fundamental selling pressure.
Yeah. All right. I like it. What have we got next?
The last one we have is the Meyer multiple,
yes.
which is, perhaps the most simple, kind of sleek, straightforward indicator for like mean reversion effects for Bitcoin. All the Meyer multiple does is it measures the current price of Bitcoin against a long-term historical price range of BTC, which is the 200-day moving average. The 200-day moving average has been used historically because, it tends to be a good indicator for the length of Bitcoin cycles. They tend to be about 200 days. And it does a good job of sort of determining the end of like a bullish or bearish cycle. And if the price of BTC is going to revert back towards like, the 200-day average.
Yeah, that's interesting, Aditya, because I just saw, I don't know if you can quickly throw up a Bitcoin chart with the 200-week moving average, but
Yeah.
yeah, so I think you're showing now the 200-week moving average, Aditya. Because I mentioned this because also I just saw a tweet earlier about an hour ago saying that someone was talking about how ETH had reclaimed its 200-week moving average this week, and Bitcoin probably will next week. The implication being also, of course, that the time to be bearish is perhaps passing, and potentially more upside for the bulls ahead. Not really too soon to talk about time frames, certainly, but yeah, it's just another indicator that perhaps if Bitcoin can retake that 200-week moving average, that would be a good thing.
Yeah, yeah. So, we look here at the 200-day moving average, and historically, when there's that much of a difference between the current price and the moving average price, you will see some sort of return or mean reversion where the price will move back towards the kind of the status quo or the 200 moving average. And yeah, if you look at it now, it's so far below, almost 50% of the value. So it's quite off kilter. So yeah, you would expect some sort of realignment. Going back to a ratio chart, which sorry, here. Yeah, historically, when the Meyer multiple, which is the 200-day moving average divided by the current price, sorry, the other way around, the current price divided by the 200-day moving average, when it's sort of twice as much, or half as much, then you'd normally see sort of a bottom signal, or a sign that it's heavily oversold or most of the selling pressure. Because if the current price is half as much as the 200-day historic price, then yeah, you're looking at what appears to be sort of a lot of short-term selling, or a lot of short-term aggressive selling. And yeah, that 0.5 level is normally a sign that of exhaustion, or there's that there's just been too much short-term selling and it needs to stop at some point. So yeah, and we kind of do see that once it hit 0.477, the price sort of like flattened out and has followed sort of a jittery, rangy pattern since, and has started to pick up and move steadily back towards that 1, or at least close to 1.
Yep. Yep. All right. Well, any other indicators, or is that our lot for today?
I think that's our lot for today. And just to kind of summarize, I think a lot of these fundamental indicators are shouting the same signal. And just a point. Sorry.
Yes. And I was just going to say, sorry. Have you got stock to flow so we can just show that? So as
Yes.
we didn't at the beginning.
Let
And
me
while you do that, I'll also just point out, I did see that Lynn Alden, who of course is a very smart macro analyst, and she had a Twitter thread a day or two ago just talking about how she's still very bullish Bitcoin with a 5 to 10 year time horizon. And one of the charts, Glassnode chart that she showed, was just the simple the rising number of Bitcoin addresses with a balance over 0.01 BTC, which of course is at an all-time high of around 10 million addresses now, with a balance exceeding 0.01 BTC. So I think she's just saying, that chart is it's not going vertical, but yeah, it's kind of going vertical. So it's just as this adoption continues, yeah, that's just another indicator, folks. All right.
Yeah, that makes a lot of sense. A lot of these charts are suggesting that there's a mismatch between the way the market is pricing BTC, and what is happening on the fundamental side. And yeah, you're seeing transaction volume, address activity, a lot of these fundamental metrics looking quite bullish and hitting new all-time highs. But in spite of that, the market price of Bitcoin has been sliding. And so
that stock to flow you're showing now, it's really it's quite we talked about that deviation to the downside. It's quite stark, isn't it?
Yeah, it is quite interesting, and it's never quite dropped this low on the downside. Like you mentioned earlier, that there have been times where it's been on the upside, where it suggests that the asset is overbought and some sort of buying mania and market speculators overvaluing BTC in the short term. But yeah, we've never seen it quite go this far on the other way, where it's the market like undervaluing Bitcoin. But yeah, it wouldn't be outside the realms of possibility that is the case. And too many people are counting BTC out, and it might be set for a bit of a comeback.
Yeah. All right. Well, it's been a torrid first half of this year, so it'd be nice if we had a slightly less torrid second half of the year. Perhaps you and I will do this again towards the end of the year. Aditya, check in where we're at. Anyway, I suppose that's a nice place to finish for today's show. But please feel free to shout out anything else you're working on here at Tekami or Brave New Coin. What else is going on for you in the immediate future?
Yeah, lots happening. As some people like to say, the bear market is the best time to build in crypto. And at both Tekament and Tekami Capital, we're seeing lots of exciting new developments and new partnerships and new products being created. Specifically, just to shout out one product, on the Tekami Capital side, we've just launched a new fund on the Enzyme Finance platform that utilizes the Polygon network. It's super exciting because compared to the Ethereum version of Enzyme, Polygon is faster, it's cheaper, and for a trading desk, it's a really, really powerful switch because we can react a lot quicker to market events. We're less sort of at the mercy of gas fees affecting our ability to trade. We're really excited to get our first Polygon fund launched on Enzyme. We're just hoping and expecting that it's going to work more efficiently and smoother and faster than the Ethereum version of our Enzyme fund.
Sounds good. And what's the website if people want to dig into that a little bit more?
The front end is enzyme.finance, but I'll share a link in the show notes specifically to the fund's front page.
Awesome. All right. Well, this is fun. Aditya, thank you for running us through some of those indicators. I guess the high level takeaway, local bottom, Bitcoin did get oversold. Perhaps in time the market will start to value Bitcoin again. We haven't even talked about any of the macro stuff that is driving all this. There's no reason to today. But listeners, I hope you did get some value out of that. Aditya, thank you very much. All the best, and I'll catch up with you again soon.
Yeah, thanks, Andy. Always fun, as you said. Looking forward to chatting again soon when, hopefully markets are a little bit brighter and, there's less macro terribleness going on.
Yes, indeed. All right. Thanks, mate. Bye for now.
Bye for now. See ya.
All right, there you go. There was Aditya Das running through some indicators suggesting, Bitcoin was oversold. Simple as that, really. Nothing else to say here at the end of the show, except thank you for listening. Please don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. But that's us for today's show. Thanks, team. Bye for now. This was the Crypto Conversation for Brave New Coin.